Hey, everybody, welcome to another Market Pulse. Today is October 25th already, 2024. So glad you're here. Thanks for joining me. We're going to go through and do a stock market update. The market update isn't as pretty green as we've had because I think we're turning yellow today. Today's a big day in the market. Some stocks that I own are up, like Tesla, and Apple's up, and a few other of the big ones are up. But the overall market is turning a little bit. If you've been watching me, or you watch me every once in a while, I've been saying that this green market gets a little long in the tooth, and then naturally what happens is people take their profits, they do it together, we start to get a trend, and then things start to turn around. And you know what? That's cool, because eventually they always turn around the other way. So let me run through a couple of slides so that you know what I'm talking about. You don't think I'm crazy? Well, you could think I'm crazy. I am a little bit. But anyway, here's the market. You can see two reds and two greens. That gives us a yellow market. I'm using the SPY lately to decide what the market is doing, but it's turning a little. It's not turning forcibly. Usually we get a big down candle. We might be getting one soon. I don't know. We're coming up on an election. Who knows what could happen? Volatility happens. You're looking at the NASDAQ here. This was the lagging index of the four indexes that I watch. And it was lagging. And I kind of said, well, I think it's going to be the one that catches up rather than the other ones pulling it down. And it is the one that has caught up. It's now at an all-time high, that 18,671 level where I have that big red line. That's where it wants to break out. Now, unfortunately, it spent so much time eking up to this little level, and now we've got a yellow market that I'm not sure it's got the strength to have a big breakout. Nonetheless, markets climb a wall of worry, and you can see them kind of melt up. And with the Fed supposedly, printing more money and putting more money into the system, we may have that. It's just a melt up. I don't think you're going to get a huge increase like maybe we did here from the bottom at 15,708. We had a huge increase up, and then another one here at what is that, 16 something. I think we're just going to get a little melt up here, and maybe that's fine, or we get a correction down the other side. That support line that I drew there, it's an upward trending support line, which say, hey, look, it's going to squeeze to the top and break out here. It's really a perfect situation. And I'm not Nostradamus. I don't know. I just read charts. And when I read charts, I'm right a lot, and I'm wrong a little bit too. And that's the way it is. This is kind of alchemy, a tarot card reading for traders. But this is how I do it. I mean, the stock charts are really human emotion. My mentor, William O'Neill, used to say, stock charts are human emotion on parade. And you can kind of see what the motion is. When this 15,000 hit, there was a big emotion up to 18,000, right? That's emotional trading, very quick, fast move. Now we've got a slower trend happening. That's a different emotion, right? All right, let's see what we got here next. We've got the S&P 500, not quite at the breakout high that we had, but it's accumulating and consolidating in that area. So that's kind of healthy. So, and then the Dow kind of has pulled back this week where it was at an all-time high. So that needs some work to get back up there. But everything's kind of above their 50-day moving average and trending higher over time. Same thing with the New York Stock Exchange, just down a little bit, but not very much, maybe a couple percent. So those markets are moving up. The VIX, which is our panic indicator, the inverse panic indicator, is below 20. It's still above its 50-day moving average. Basically, not a lot to worry about in the market, not a lot of caution and panic and, things like that. They're just basically saying, we're not sure, but we're not too worried. That's basically what this chart says, okay? The transport index, you could see I put a big red line there. That's the trend. And you could see generally that's a nice upwardly moving trend, but the Dow transports, according to the Dow theory, they're kind of a leading indicator on what's going on with the Dow, right? So we got a longer term or midterm trend going upward. That's good for the Dow. That means, people are moving goods around the country. But this week we've had a little bit of a pullback to the 50-day moving average, almost right to the 50-day moving average, which to me is just wild that the whole crowd performs predictably. But yeah, so that is that is something to look at. We've got a longer or medium term trend, but a little bit of a pullback. All right, let's go to the next one. All right, the airline index. I thought this was interesting because I look at it over time, and for some reason, the airline index is basically a bellwether of the market. And this is saying that we're not in a recession, right? If you look at treasuries, they're saying that we might be in a recession. We look at oil, they're saying we might be in a recession. But you look at the airline index, people are traveling. So maybe we're not. we got a lot of mixed indicators going on right now. So you kind of have to figure out what's going on for yourself. Tesla had a big week, reported good numbers this week after 4 quarters of disappointing numbers. Now they're blowing numbers out of the way. The Cybertruck is profitable. That's their newest truck. It is the #1 selling truck in the US. I believe that's electric truck for sure. Last quarter, it was the #1 selling truck. But I think it's going to overtake the F-150 at some point. I don't think it can. I might be just talking smack here. But anyway, it's profitable. It's unheard of. Rivian, who's been making trucks for a couple of years, has not even made it profitable yet. Here we are, Cybertruck is profitable. They had these cyber cabs that were rolling out a couple of weeks ago. We talked about that last week. Amazing. The cost is coming down on Tesla vehicles, right? Where everybody else is inflationary, the cost of production at Tesla is decreasing. That's because they have incredible engineers, including Elon Musk, who believes that you can continue to pull the costs out of the car without giving up on quality. And that's why the Model Y is the #1 selling car in the world. And so, Tesla's doing amazing things. Anyway, the numbers were great, and that's why the stock is up 20% this week alone. So if you've been doing any of my programs where you're selling calls, we talk about in my mastermind group how this week was one of those weeks you want to be protected and not exposed too much. But if you are going to be exposed, it was going to be to the upside. And, we got lucky on that. And Tesla really made it happen for us. So that's Tesla. Apple is right at an all-time high. I think that 234 level is where it wants to break out. It's going to be a small, melty breakout kind of thing because Apple is kind of an industrial company now. They kind of move along slowly. So you're not seeing a huge amount of breakout, like going to run away and triple, quadruple in 2 months kind of thing. You're going to see a nice little chugging. We call it a chugger. It's going to chug up the way I read the chart. And it might run into a little resistance here at the breakout spot, but it's Apple. And I think coming into the holidays, it's going to do well. NVIDIA, same basic setup. These are weekly charts I'm showing you this week, so you can zoom out. NVIDIA is just above a little breakout spot, but it's a late stage base, so be careful. Late stage bases and low volume breakouts have a tendency of correcting. So if you're going to be in NVIDIA, don't be overexposed to it, or at least know what your downside is going to be in your strategy. Have a trading plan. Like I always tell everybody, have a trading plan. That means please do it. All right. Amazon, it's close to a breakout. It's still got some work to do. It's got to go up about another 20 or 11 points to 13 points, something like that, to get to that all-time high. Excuse me, we're coming into holidays here, so I think Amazon's just going to continue to do kind of the same thing. We have a very slow chugging up market is what I'm seeing with all these stock charts. MicroStrategy, and I'll probably leave you with this one. This is a stock company that I've been talking about for a year. Michael Saylor is, I believe, with Elon Musk. I don't know who's going to be the first trillionaire, but if we get a big Bitcoin spike, I think that Michael Saylor and his company, MicroStrategy, might make him the first trillionaire. If not, it'll be Elon. It'll be those two guys. Elon's already the richest guy in the world. He doesn't have much to go. But I think you're looking at these two players figuring some stuff out. And ironically, they're both engineers. Mara Holdings is the last one I'll say. This is a Bitcoin play. They're a Bitcoin miner, but they're under the 200-day moving average. They're not doing quite as well. I mean, you look at that chart from MicroStrategy, that's a totally different looking chart. It's on a breakout. It's on a what I call an 8-week breakout, which is like an unbelievable breakout. So you've got to watch that as well. I think I'll leave it there. I think I've yapped enough today, right? But anyway, thanks for being here. I hope I give you some perspective on the market every week. Hope that maybe you take away an insight or two and make some money. Remember, we have a yellow market, so it seems like it's going to be yellow by the end of the day. Just be cautious. Don't lose money. You can always come back to fight another day if you don't lose money. So just be careful, and I want to continue to stress that going into yellow and red markets. They always turn green again eventually, but they got to go through their cycles. So have a great weekend, everybody. Thanks for being here, and I'll see you on the next Market Pulse. Take care.